Hi guys, good afternoon people. How are you guys doing? Good? Till now fine. When are you appearing? 27, 28, 29. This May. How many are appearing for May 26? May 26 is 1, 2, 3, 4, 5, 6, 7, 8. Okay. And when is your attempt? 27. 27. There? September 26. Okay. Right? 26 September. May 26. September 26. Behind? 27. May 26. Okay. Oh, what a trust you guys have. We are in January. Your exams date is what? Third, 3, 5, 7. 7, right? No. 2, 4, 6. Sixth is audit paper. 6th May. And we are starting now. What immense confidence you have. The confidence is on the teacher or on yourself. Nevertheless, on both. Yeah, very good. So it's very interesting, easy subject. Okay. Whatever you have heard, learned, okay, what it is this, what it is that. It's not that everybody fails. Not everybody fails. Okay. What's the passing percentage of CA final? You must have heard some percentage of passing. What's the passing percentage of CA final? So if 100 people are sitting, approximately how many passes? Around 15%. 85 people fail. And the problem is this 85 people. This 85 people will spread rumors because you guys are first attempt students. Okay, my senior, my Anna, my elder brother, my elder sister, my office seniors have told audit is this, audit is that. It's not that. Think about this 15 people also. This 15 people have cleared. Has God given them something extra? 4 hands, 10 legs, 2 brains. No, they're also normal people like us. But the strategy is very much different. The approach is very much different. Now, if you know rankers, how many rankers do we have generally? Please talk to me. I'm not in video. You can talk to me. How many rankers do we have? 50. Minimum 50 rankers are there. Now, AIR 1 or AIR 50, either of it, okay? His approach is also very much different. They understand the concept, they mug up the concept, and they write in the exam. It's all about your understanding and writing. The problem is writing. People do not know what to write. I'll show you a lot of papers I have of CA final. Can you see this answer papers? Answer papers, answer papers, answer papers. I have different marks. Like somebody on 70 have scored 36. Somebody on 70 have scored 22. Somebody have scored 10. I have a paper who have scored 0 also. And the best part, out of 36 pages, the student has written 32 sides. Still he scored 0. And he's fighting with the teachers, with the institute. Why I have been given 0? I have written full paper. Agreed, he has written full paper, but the content is exactly opposite. So you need to write what is there in the module. I see paper checkers. I just posted day before a reel. It's written that 250 rupees they get to check CA final ka paper. 250 rupees. In that 250 rupees, your future is getting decided. So you have to take a very wise call. Now imagine if somebody is paying you 250 rupees. Will you put all your energy, brain for the 250 rupees? No. It's a fact, correct? But what they do, they just match the answer. Suggested is there, and with the suggested heading is matching or not. Starting is matching or not, ending is matching or not. They just do matching principle. You must have learned in accounts matching principle. They just match. So our target is also same. Let's match the answers. I hope everybody of us will agree on the same point that the goal to become chartered accountant is only one. Don't give me that shit. It is your dream to become chartered accountant. It is not your dream. What is the basic role? The goal. Why are you doing this course? Money. Everybody has the same goal, right? So to achieve money, to achieve that goal, I need to be a chartered accountant. To become a chartered accountant, the problematic subject in entire group one is what? Audit. You are saying. At least don't insult me on my face. Okay. The AFM, generally people are very much strong with AFM. Like people get 85, 90, 95 because it's very logical. You deal in practical life, right? Stock market king. When you studied AFM, you would be like, oh, I next Warren Buffett, I am there. Okay. Because every CA final student gets that feel, okay, I'm the next Warren Buffett of the world. but the reality is very different. FR में generally people get 55, 60 marks. Okay, like very few people get 90 above marks, but 80% people get 19% marks in AFM. So AFM has to be very much strong. Okay, the problem is audit. Audit is because it's a dry subject, it's full theory. Plus, ICI cut is wish, the heart of the checker. If he wants to give 2 marks, he will give two. If he wants to give three, he will give three. You can't fight with me, sir. Why I have got two? On 5 mark ka answer, it is his wish. If he wants to give two, two and a half, three, three and a half, you will never get 5 on 5. That's very much clear. So let's be very clear. Our agenda is to clear the exam. I hope there would be nobody who want 95, 98 marks in audit. One single student, one single attempt, 95, 98 marks. Sorry, this class is not for you there. We aim for good marks, but you know the reality there. Okay. Now, let's talk about the subject first. So you will be getting two books from my side. One is the main book, that's a handwritten font wala book, like this book you will get, and one is the question bank. Question bank comprises of all model questions, RTPs and MTP ka question. Okay. So if there are 15 questions in a chapter, okay, which have come in the exam, out of 15, around 8 and 10 will do in the class. 3, 4 I'll give you homework. Okay. You just have to solve those questions orally. Okay. Now, if you talk about audit, so it's CA final, group 1, paper number 3. Okay, the subject name is Advanced Auditing, Assurance and Professional Ethics. Okay. Now, from ICI side, you must have got one, two, three modules. Have you collected those books? Have you ever opened those books? No. You were waiting for me. Imagine if something had happened to me in the last year, then audit is gone for toss. Thanks for the trust. I like it. Now, there are total 19 chapters in a syllabus. 19. So the module they have divided like 1 to 7, 1 to 8 chapters. So 1 to 7 chapters are there. Then 9 to I think 15 or 16 is there. Then 17 to 21. Okay. Now we're gonna do the combination of one big chapter, one small chapter. Oh, sorry, one big chapter, three, four small chapters. So because if I do all big chapters together, you will not come from the next day. Okay. If I do all the small chapters today, you will be problematic. I mean, I will create a problem for you towards the end. So it's better we do one big chapter and three, four small chapters. So what will happen? The subject will move very easily. 19 chapters are there. The syllabus ka time, if I say, it's around 110, 120 hours. Okay. Almost every day we're gonna do one chapter, except for the big chapters. Big chapter will take a lot of time. The class will start at 2 o'clock. It will go to around 7:38. In case you need a break, let me know. In case if I need a break, I will let you know. Okay. But make sure you be attentive in the class. You be regular in the class. Okay. People who are appearing for May, okay, you have to come every day to the class. Obviously, you'll get video backup. You'll get a video backup for all the chapters. You can watch it later on also. Specifically for May and September. Okay, September also. Yeah, no. For May attempts, all the amendments I'll be doing in the class. For September and onwards, because the cutoff is generally 6 months prior to the exam. So September ka cutoff will be March. So we are in the month of January right now. See, hardly any amendments are there in audit. Maybe like one or two additions are there. Like this time ka RTP mein they have given 3 amendments. With that, answers are not getting changed. So it's just a clarificatory amendments. Every time I upload a video on the YouTube for the amendment ka part. So people appearing in 27, 28 also, not to worry, I'll be uploading in 100% English all the amendments for every time I upload. Okay, that's one. Number two, you'll be getting two books. One is the main book, other one is the question bank. Three, I have drafted a MCQ book. Okay, I mean last month only we had completed that MCQ book. That MCQ comprises of module ka MCQs plus small MCQs plus there's a booklet of MCQ on the website of the institute. We have compiled that also in the book. So I'll be giving a soft copy for that. So what do you want to do once we're done with the chapter? Just go back home, solve those MCQs on a sheet of paper. Like one ka answer is A, two ka B, three ka C, four ka D. That way, what will happen is you'll get the confidence with regard to the concept. See, module ka MCQs they are not asking. It is not foundation level MCQ. The level of MCQs are very much high, very much high. Okay, it's all on the concept. If you have a very good conceptual clarity, trust me, on an average, how many questions are there in MCQ? If you have any idea, how many questions come in the exam? No idea. Okay, I'll let you know. Okay, there are 15 questions. Out of 15, on an average, people get 10 correct. But my target is not 10. My target is 15 because we are playing on MCQ only. We will place our bet on MCQs only. So my target is to aim for 15. See, if I aim for 15, around 12, 13 will go right. Correct? So let's have a bet that we want all 15 to be very much correct. So MCQ ka book, I'll be giving you a soft copy. The best thing, what I'll give you from my end is handwritten notes. People who have done inter with me, okay, they know handwritten notes are very much important because after appearing for AFM, okay, how much time do we have for audit? Exact time. AFM paper gets over at 5 o'clock. You go back home around 6, 6:30, you will reach, have something, you will start studying. That evening. The next day ka morning, afternoon, evening, that full day. And the actual audit paper ka till 12 o'clock, I would say. If you count effective hours, it is 24. Minusing, I mean, you'll sleep on both the days. You'll have your daily course, okay? Effectively, you have 24 hours. How many chapters we have? 19. If I give 1 hour, one chapter, 19 hours are gone. But there are few big chapters which will not be over in 19 hours. Plus, not everybody has the same speed, right? Every student is very much different. Some are very fast learner, some are slow, some are very average learner. Like I'm a very slow learner. I take lot of time to understand the concept. Lot of time. So I'm a very slow learner. So I know that 19 chapters will not get over in the 24 hours. Okay, the number of pages in the book is around 586 approximately. Okay, around 586. It will not get over on that particular day. So I need my handwritten notes. That handwritten notes we will be, not we, you will be writing in the class itself. I could have given PDF also, but the problem is exam is not oral exam. It is not your viva. It is writing. The problem with CA final student is writing. See why people love AFM? Because teacher first solve, he erases it, he again solve, then you copy in your book, you go back home, again you try to solve it, right? So when you study, when you do self-study, you again write and solve. So AFM, FR, all practical papers are very much lovable to the students. But when it comes to theory, you have understood the concept, but you do not know how to write, what to write. So we'll be writing in the notes. Few chapters ka few PDFs, I'll give you homework to complete it in at home just to save the time in the class. But I want everybody to write the notes. So like this, you will get handwritten notes for every chapter. So these are my latest notes of the latest batch which I've taken in Hindi in August and September. So like this, we'll be writing the notes itself in the class. And when you solve the question with me from the question bank, you will easily get the confidence. Okay, that's about the notes. So three books: main book, question bank, MCQ book as a soft copy. Handwritten notes will be writing in the class. If you have not got the any notebook today, in the break, you please get a notebook. So we write from today itself only. Okay. Plus, I'll be sharing this analysis with you. So this is analysis till September 25. See, you are in CA final by hook or by crook. I want everybody to get clear. Okay. So our goal is to clear the exam. So you have to be little smart. See, you don't have to be a donkey. Hard work is not required here. You have to be little smart. What is coming in the exam? What is not coming in the exam? What may come in the exam? Like if you see the most important chapter of our syllabus is our professional ethics, chapter number 19. Can you see the number of marks here? 17 marks, 18 marks, 18 marks, 18 marks. Till September 25, 18 marks it is. Okay, now Jan May, the Jan 26 ka paper will also happen. Trust me, we'll be solving Jan 26 in the class itself. And that's my confidence on you that you will give right answers. Whatever chapters we will be doing, we'll be solving Jan 26 paper also. So I've written the question number also where it had come. So as a student, when you're doing self-study, you know what chapter I have to give more weightage. Okay. So imagine 18 marks is my professional ethics fixed. This is just descriptive analysis. Huh? MCQ is separate. So professional ethics come approximately 22, 24 marks in actual paper exam. So this analysis, when you're studying your other paper also, have an analysis. Okay, what is coming, what is not coming. If you see the first chapters, like if you see audit planning, strategy and execution, 0 mark, 0 marks. Just 5 mark, 5 mark. Materiality chapter, chapter number 4, 0, 0, 0, 0. No questions only. So if you are a person and if you're studying chapter number 4 in deep, no use. So you need to give weightage. You know, generally we must have done ABC costing. What is A? Most important. What is C? Least important. What is left? It is in B. Correct? So same way we do this. Okay. by the time people are appearing in May 27 and September 27, you will have more analysis coming up. Because see, by that we understand what is the trend ICI is asking. So this is about the descriptive. So this month, like the last month, December, I was very much free. So I was free, so I did an MCQ analysis also. So May 24 was the first attempt in the new syllabus. In May 24, ICI gave MCQ, but the question paper was taken back by the ICI. So from November 24, they started giving MCQ ka question paper. So from November 24, I have analyzed. If you see, there's a chapter called as Bank Audit and NBSC, which you had in Inter also, if you remember Bank Audit, okay? 6 marks. PSU, 4 marks. Professional Ethics, 4 marks. So 6, 4, 10, 14. Now, when you go to May 25, Bank Audit NBFC, 4 marks. Professional Ethics, 2 marks. If you see Audit Evidence, chapter number 5, 8 marks. 8 marks. So this is your Inter ka chapter. 500 series was there. 500, 501, 505, 510, 20, 30, 40. So the chapter number 2, 3, 4, 5, 6 and 7. This is all your inter syllabus. So we'll be again running through all the inter syllabus. And if you open the module of CA final, for this chapter, ICA has not given any descriptive answer. They have just given charts. And ICA have told, I will not be asking descriptive question. I will be asking only MCQ. But MCQ has a level. MCQ has a level there. But you can't trust ICA. Every attempt, they are asking one big question also from here. But the problem is it is not there in the module. So you need to rely on the notes. Okay. Now, the latest paper, September 25. Can you see this reporting chapter? How much marks? 10. Because in descriptive, it came for 0 marks. No, I think only one question. Karo ka question came, 4 mark ka question. So, professional ethics, 22 marks. Reporting chapter, for sure, 14 marks. For sure. Including MCQ and descriptive. Okay. These two chapters are your core chapters. And the best part, reporting chapter, you already know. You have done articleship. I hope so. In articleship, you must have done something audit also. In some audits, you must have prepared audit report also. It is basically audit report preparation. How much time do we take to prepare audit report? 2 minutes. Right? Control F, Control R, Control S. Save. Audit report is prepared. Just stick the UDIN. Okay. Put the stamp. Done. Report is prepared. Here, plus you must have prepared Caro also sometime. Caro, if you have heard this word. Okay. Same thing will come here. So whatever you have done in intermediate, I'll be repeating those content here. So two chapters like professional ethics wala chapter and reporting chapter. This is very, very much important. Okay. So this is MCQ analysis. So I'll be sharing this two analysis in the group so that you can take your wise call which chapter to focus on. Understood? Now, so there are total 19 chapters in the syllabus. If I have to give you the paper pattern, right now, what is the paper pattern? So we are in CA final audit. 100 marks paper. Paper do not come for 100 marks. Paper comes for 116, sometimes 120 marks. One main question as option, plus sometimes in question number 6, they give internal option also, like 6A or one more 6A. Okay. The breakup is 70 marks and 30 marks. 70 marks talks about descriptive. 30 marks talks about MCQ. Currently, what is the pattern for MCQ? 15 questions, 2 marks each, 30 marks. Right now, no negative marking. Right now. I do not know about 27. 26, there is no negative marking right now. Okay. So it's better you clear as soon as possible. 70 marks. If you see question number 1, A, B, C, this is compulsory. That means you have to do one mandatorily. From question number 2, question number 3, question number 4, question number 5, and question number 6. Out of this 5, you have to do any 4. The pattern is same. A, B, C in all. 5 marks, 5 marks, 4 marks. The pattern is exactly same. Okay. So every question 14 marks. Question number 1 is compulsory. 2 to 6 may say you have to do any 4. 1 you can remove in option. So this is a current pattern. Now 116 mark ka, let us assume paper is there. You went in your respective attempt. You started writing. Okay. As per your capability, caliber, and intellectual power, can you tell me how much marks you guys can score? Please talk to me. I'm not in video. How much marks you can score? We are in a democratic country, India. You can speak. We have freedom of speech and expression. Can you tell me how much marks you can score? As per your capacity, capability. May 26 people, you have your exams in like 4 months. Tell me. 50. Okay. Others, 45, 40, 45. Yeah. There, 50. I need 70. One single student. One single attempt. Let's aim for 70. When you aim for 70, you'll end up in 50s. When you aim for 50, you'll end up in 40. Okay. People who aim for just 40, 45, you get marks according to your waist. 32, 34, 36. Okay. Okay. So let's aim for 70 marks. See, because when you aim for 70, your aggregate issue gets resolved. There are a lot of people who are stuck at 140, 142, 145 because of aggregate issue. Others, FRAFM exempt, audit 31, 32, 33. Very common. MCQ mein they will get around 15, 20, 22 marks. Problem is descriptive. Descriptive mein they don't even get around 10 or 12 marks also. You have to focus on a descriptive. If your descriptive is very strong, trust me, MCQs will be very easy for you because your concepts are very much clear. Okay. So our main focus would be on the descriptive part. Now, this is the first reason because of aggregate issue. Number two issue is if you get 70, you'll have my number. Message me, Instagram, Telegram on my number that you've got 70 marks or you have got a rank. I will take you to Taj, either a lunch or a dinner from my side. What a smile it is. Hungry India. Okay. You'll get food from my side. Okay, last month when I had come, okay, November, I had taken all those people. Those are inter also, final students also. Generally, I promise for Bombay Taj, okay. So if you are in Bombay, you can message me. I'll take you there. But if you're not there in Bombay, I'm in Bangalore. So I will definitely take you Taj. Fees is very garib, but I can afford. Okay. So I need 70. There are a lot of people who get 70. There are people who get good marks, people who get rank. But yeah, you need to work hardest. The competition is very much tough. You also know that, and it's your last level. After that, you're qualified. You excel in your life. But audit may every day you need to revise every day. So that's the reason I give handwritten notes and then make sure everybody write in the class. Reason being, when you're traveling, see audit के लिए never ever waste time. I'll give you a timetable also how to study, when to study. When you're traveling, just click the photo uh, of the notes. Okay, it's your own handwritten notes, right? Click the photo when you're traveling by a public mode, maybe by metro or by bus or by train. You read the notes in your phone. Okay, so when you read the notes, your own handwritten notes, it gets stuck in your mind. Every day, if you're doing this exercise, trust me, nobody will make. I mean, nobody can remove audit from you. Like if you ask me on what page number, what content is written, I may not remember exact things. But little I can remember. "Achha, on page number 420, this is written. Page number 500, this is written. Because I have written that book. So same thing will happen with you. Plus, whose handwriting you will love the most? Yours only. Correct? So that's the reason we'll be writing the notes in the class. Understood? Okay. So I need 70 marks or a rank. How many of you are appearing for both the groups? May. May. Both the groups. Okay. Work hardest on IBS. Huh? Institute is taking game for IBS. Lot of people have failed in the previous exam in IBS. Because you think IBS is easy. Let's pack a suitcase. We'll take all the books. Taking all the books is not suffice here. You should know where the content is written. So in your module, you should know, like for example, if you're doing FR, so FR may where in days 108 is written, 116 a content where it is written, you should know where it is written. Because in those 4 hours, you need to hunt the answer. Taking more books will not give you more marks. I saw like a lot of people taking that full three bags with the book, parents helping to lift towards the, I mean, second, imagine if your classroom is on fourth floor. You have to take all the books. Parents are not allowed above. Okay, you can take a helper also. So one of my students, like super rich guy, he took two of his office boys to take the books above, I mean on upstairs. Lift is not allowed for the student. So he calls me from the exam center. Sir, can you help me out? I said, what? Sir, these people are not allowing my office boys to lift books for me. I said, mad fellow. It is your exam. Who asked you to take all the books? Sir, my friend were taking all the books. In the market, I also bought all the books. So now I have to lift to the floor. And he's very heavy. He's around 120, 130 kgs. I said, you have to take the books. Sir, can you do something? I said, I can't come and lift the books for you. You have to take the books. So ideally, we are preparing the index for audit from the module. So I think by this week I'll be able to finish off. I will share that index also. It's only for IBS. Okay, you should know where essay so and so is written, where Karo is written in the module. So there's a question, you hunt for the answers and you directly write. But trust me, IBS is tough. Huh? This time IBS is tough. Have you finished your SPOMs? Self-paced online module A, B, C, D. People appearing May 26, have you cleared? Okay, people who have 27 attempt, clear ASAP. Institute is making fail in A and B very badly. Very badly, very badly. A lot of people are failing in A and B. Even though it is self-paced online, still people are failing. People who appeared in look, who cleared intermediate in September. September ka result came in November. So I have two students. We are in January right now. They have cleared all the four sets. What to do in life? Sir, I want to study. September 25 May they cleared intermediate. Their CA final would be in September 2028. They can't start any subject because no classes have started yet. In 28, what is the syllabus? We even do not know, correct? So I told them, go and give SPOM. So they took the classes. They watched the lecture at 1.5 speed. You know, Gen Z 1.5. Brain do not get processed at but 1.5. So they had watched the lecture. They went back to back exams. They cleared the exam. People appearing in 26, 27, they have not appeared yet or they have failed. But all those people who are young, they have cleared. Why? Because they're in the rhythm of that studying. The problem with us is that because we studied long back, right? Then BCom also was cleared long back, very important degree of life. Okay, then you have earned huge quantum of money. You get that motivation. Okay, wow, I can earn stipend, huge stipend. So that motivation demotivates us to study. See, money, whatever work you're doing right now, that money would be 10x once you clear. Let us assume if you are earning stipend as 10,000 or 15,000 as a stipend, okay? Once you become chartered accountant, the work is same. Same ITR, same accounting, same audit. But only because two alphabets are there in front of your name, it will be 1 lakh rupees. So decide your future. So don't miss lecture. Watch the lectures very thoroughly. Write the notes. If you have a doubt, please ask me. Have a habit of writing, scribbling. Learn the notes with me in the class itself. And please talk to me. I'm not in video. Okay. Shall we start? We start with a new chapter. We start with first as have you got the book, main book? How many people have not got? One, 2, 3, 4, 5, 6, 7, 8. I think by tomorrow you will get books. I think 3 or 4 people will be still short because they told me to order 5 books only. So we have ordered more 5 books. I'll tell them to order more books because books are coming from Delhi. I think it will take 3, 4 days. So I'll make sure they will give you the handouts. We'll xerox the whatever chapters we are doing. So you read from the handouts. Okay. Book will come in like 3, 4 days for you then. So we do a very interesting chapter today. We are starting with chapter number 13, group audits. So if people who have books, please share with your friend. Come to group audit. Online people, please check audible visible. Okay, now listen. So group audits. Very interesting, very easy chapter. Every time it has come in the exam. The weightage of the chapter would be like 5 marks to 8 marks, depending upon MCQ. 5 to 8 marks of weightage is it. So first, let me teach you. Then whatever is to be written, I'll let you know. Okay, 4 marks to 8 marks is the weightage. Now, group audit. Imagine there's a company AB Limited, and there's one more company called as Baby Limited. Now, this is a story when I was single long back. I saw a girl, her name is Baby. Okay, have you heard about place called as Dharavi? What is Dharavi? It is Asia's largest slum. So I stay there. Okay. Now, I was roaming here and there. I saw Baby. She's born and brought up in London. She came to India. I saw her. She saw me. I told her, whatever we do together now. She threw the sandal on my face. I said, now I need to get you under any circumstance. What I did, I invested in her company more than 50%. When I invest more than 50% in some other company, what do I become? Holding company. Baby, subsidiary company. That's one way you become holding subsidiary. Or if I control more than half of board of directors. If I control more than half of the board of directors of another company, still AB would be called as holding company. BB would be called as what? Subsidiary company. Now, in FR, you must have learned if there's a holding company and if there's a subsidiary company. Everybody knows that if it's a AB limit, it's an individual company, they have to prepare their own SFS. What is SFS? They have to prepare their stand-alone financial statement. Baby itself is a company. She will also prepare her own SFS. What is SFS? Stand-alone financial statements. Now everybody knows that AB and Baby guy will have that thing. What is that thing called as? Consolidation. It is called as what? CFS. Consolidated financial statement. What it is called as? Consolidated financial statements. You must have learned the accounting part in FR. Right now, what we're going to do is the audit part of it. Now, reading this much, you tell me, as per your knowledge, who will do consolidated financial statement? Which company? AB Limited. It is called as what? Holding company. Or we call this as parent company. Which company, guys? Parent company. AB Limited would be called as what? Component. It will be called as what? Component. So subsidiaries, branch, associate, joint ventures are called as what? Components. The holding company is called as what? Parent company. So if I have to ask you, whose responsibility is to prepare CFS? Whose responsibility? Parent company. Whose responsibility? Parent company. Now, at what percentage do we become subsidiary? More than 50%. Or you control more than half of the board of directors. Okay, you must have heard about associate company. At what percentage do we become associate company? Minimum 20%. What will you say? Minimum 20%. You must have heard about wholly owned subsidiary. You become at 100%. So it says if you have an associate or if you have a wholly owned subsidiary or just a subsidiary, okay, make sure holding company you prepare what? You prepare CFS. This is written where? It is written in section number 129. 129 of which act? Companies Act. So 129 of Companies Act 2013. So it is written there that boss, section 129 says if you are a holding company, you have a subsidiary, associate, joint venture, or a wholly owned subsidiary, make sure you do the CFS. Which company has to prepare? The parent company. Now let's take an example. Hold on. What's your name? Niranjan. So Niranjan is the auditor of AB Limited. You use I or E? I. Niranjan. And your neighbor, what's your name? Praveen. P-A-P-R-A. V or W? Praveen. Right spelling? Praveen. Now, AB Limited is a parent company. Niranjan is the auditor of AB Limited. When I say auditor, I'm referring to which auditor? Internal auditor or statutory auditor? Statutory auditor, okay? Same way, Praveen is a statutory auditor of Baby Limited. Now, who will audit AB Limited का FS? Niranjan. Who will audit Baby Limited का FS? Praveen. Now, if you know AB and Baby are holding subsidiary, if they are holding subsidiary, they have to prepare their own standalone also. And because AB Limited has a subsidiary, they have to prepare CFS. Who will prepare CFS? The parent company AB Limited. Now the question is, if CFS is prepared, somebody has to do the audit of it. The question is, who will do the audit of CFS? Niranjan will do or Praveen will do? Who will do? Who will do the audit of CFS? Niranjan. So basically the parent co-auditor has to do the audit of CFS. So this chapter we're gonna study from the perspective of CA Niranjan. So Niranjan would be called as, very important word, sound is very much important. Pa. Pa means parent's auditor. What will you say? Parent auditor. Praveen would be called as A. A means another auditor. What will you say? Another auditor. So if you're seeing the word another auditor, it does not mean another auditor. It basically means your related company auditor. When I say related, related in terms of subsidiary, associate, joint venture. Understood the background? So again, I'm asking you, whose responsibility is to prepare CFS? Parent company. Whose responsibility is to audit the CFS? Pa. Pa ka full form? Parent's auditor. Parent auditor basically means what? Parent company auditor. Or they will be using the word as principal auditor. Principal auditor, parent auditor, both means the same. Understood? Now, where it is written that every company having subsidiary associate have to prepare CFS, where it is written? It is written on the screen. Can you find out? Section number 120. Now, which act? Companies Act 2013. So, Companies Act में clearly it is written, if you have a subsidiary, associate, joint venture, holding company, prepare CFS. Where it is written? Section number 129. 129. Now, I talk about the exemption. So, I'm talking about exemption under Companies Act. Exemption under Companies Act. So, it says every company has to prepare CFS. Okay, every company basically means every company having subsidiary, associate, joint venture have to prepare CFS. But now I'm talking about exemption. Now, let's use your common sense. A Limited is there, B Limited is there. A has invested 100% in B. Can you tell me who has to do conso? Who has to do conso? A. Imagine if in the picture C Limited is there and they have invested 51% in C. Picture mein B and C is there. Who will do conso? Only this much is example. Who will do? B. One more question. If imagine A Limited has invested 51. See, ideally you become subsidiary at more than 50. Okay? Always remember more than 50. But for your understanding, I'm writing 51. Okay. Now, if A and B is there in the example, who will do conso? Who will do conso? A. If picture mein B and C is there, who will do conso? Who will do conso? B. If picture mein A, B, C is there, who will do conso? Who will do conso? A. That means who has not done conso? Who has not done conso? Again, once more. If A and B is there, who will do conso? Who will do conso? A. If picture mein B and C is there, who will do conso? B. Picture mein everybody is there. Who will do conso? A has done conso. That means who has not done conso? Why would C do it? C code that is not applicable only, na? So who has not done conso? B Limited. So we are talking about exemption. Ideally, B should have done conso. But see, C code to conso is not applicable only. So ideally, B code was applicable, but we have not done consolidation. That means B have got what? They have got exemption. B has got what? Exemption. But B will get exemption when? If they follow three conditions. Number one, they will take no objection certificate. They will take NOC from all the members or one member. B will take NOC. NOC means what? No objection certificate, that we are not doing conso. See, ideally B have invested in C. So they have to do conso with C. We are not doing this conso. They have to take NOC from whom? All the members or one member. My question is, when will a situation of one member arise? Wrong, wrong, wrong. Everything is on the screen. Use your common sense. No, if it has more than 51%, that means other percentage would be held by somebody else also. I am saying, when will one member come? Everything is on the screen. You can see 100%. Because if A Limited has 100% of B, so in the books of B, entire 100% held by one person. Who is that one person? That is A Limited. So you go and take NOC from A Limited. Okay. But when will all members come? When if it is just 51% subsidiary, to the extent of 51, it is A Limited, and balance 14 would be like people like us would be having it. So ideally, you have to take NOC from all members. All means sub. Sub means all. All means yella. Yella means yellaru. Inter people have taught me today only. Okay. So it says you have to take NOC from one members or all members. Basically, everybody says you have to take NOC. Yend B is not a listed company or not wanting to get listed. What you will say? B is not a listed company or not wanting to get listed. That means this company is not a listed company, neither they want to get listed in future. And ultimate ultimate holding company prepares CFS. Can you see the example and tell me who's an ultimate holding company here? A. If A is an Indian company, to them section 129 is applicable. If A Limited is preparing CFS, that means B is exempted. But imagine if A Limited is a company in Thailand. Very beautiful holy place it is. Now you tell me, A Limited is in Thailand. So to them, will Companies Act be applicable? No. If Companies Act is not applicable to them, ultimately then who has to do conso? Then B has to do conso. But if B want the exemption, they should follow condition 1 and 2 and 3. What's the first condition? NOC from whom? All the members. Number 2, or one member. Okay? And number 2 condition, it is not a listed company or not wanting to get listed. Very good. Third, ultimate holding company. Ultimate holding company prepares what? CFS. If condition 1 and 2 and 3 is followed, then B Limited, what are you? You are exempted. Exempted from what? Preparing the CFS. B is called as intermediary subsidiary. What it is called as what? Intermediary subsidiary. Understood? So in the entire Companies Act, only one exemption is there, that is intermediary subsidiary. Understood? Now, don't try, we'll be writing in the notes later on. We'll be writing everything. Now, this is exemption under the Companies Act. Now you guys are champ of FR. I think you have done INDES. No? May people? You too must have done. So exemption under INDES. So that exemption was basically under Companies Act. Now this is exemption under INDES. Now you tell me which INDES says that you have to do consolidation. 110. 110 says that you have to do consolidation. Okay, mandatory it is. If you are a holding company, you have a subsidiary, you have to do consolidation. But there is one exemption. The exemption is given to one entity. It is called as investment entity. Which entity? Now, what do you mean by the word investment entity? What is investment entity? Who has done investment? BCom student. You must have topped at your time. Huh? BCom. Investment entity means who does investment? What a common sense it is. Please use little brains. How do you define an investment entity? So maybe it has to be investing only. If I am selling this camera and I am doing investment in Reliance ka share, my main business is to sell camera, but I am doing investment in Reliance ka share. Am I an investment entity? No, I have a trading ka business. Investment entity means basically whose main business is to invest. Invest where? Where to invest? In other companies in the form of securities, shares, bonds, debentures, mutual fund, everywhere. Their main business is investment. Okay. Now, imagine AB Limited. So I have acquired, let us assume A Limited, 55% shares. Now B Limited, 30% shares. Imagine C Limited, 100% shares. D Limited, 60% shares. Then A ka below, there is A1, subsidiary. After subsidiary, what it comes? I invest in subsidiary. After subsidiary, what it comes? Sub-subsidiary. Subsidiary ka subsidiary is sub-subsidiary. Okay. Now, here they have invested, let us assume 33%. Then there is B1, B2, C1, C2, C3, D1. This is the entire family. Now, AB Limited has 55% stake in A Limited. Just read this much. You tell me, who has to prepare console? AB Limited. Imagine if I say AB and B Limited, who has to do console? Why not required? Because B Limited may have invested 30%. So B became what? Subsidiary. Associate. So if you have a subsidiary or associate or joint venture or wholly owned subsidiary, you have a family, you have to do conso. So ideally, who will do conso? AB Limited. Here, AB and C Limited, AB Limited. Here, AB and D Limited, AB Limited. But was my business, because I know, see, I've invested now. I know that by April, my money would get double. Okay. In April, I will sell the money. I mean, sell all the shares. But the problem in between is 31st March. 31st March comes in between. On that day, this is my subsidiary, this is my associate, this is wholly owned subsidiary, this is my subsidiary. I have to do conso. But my nature of business is such that I need to do investment and then liquidate my investment. So who am I? Investment entity. If my nature is such that, then one Ind AS give me exemption. Ind AS what's one? 110. It says if you are an investment entity, don't do consolidation. So I am getting exemption under Ind AS because I am which entity? Investment entity. But so I will not do consolidation, but I will have profit and loss. If I have a profit and loss, I have to route it through. People who have done with FR, you must have heard this word. FETPL. I'm not abusing you, it's a word. Fair value through P&L account, profit and loss account. People appearing in May 26. Have you heard this word? Why does it looks like that you have not started FR also? Started FR, na? Okay. It's a word FETPL. See, it's basically a commodity for me. Like I sell camera, here I am selling investment. So what is the profit and loss? It is not rooted in balance sheet. It is rooted through P&L. We call this as FETPL, fair value through P&L. Okay. Now, AB Limited doesn't have to do conso. Why? Because their nature is what? Investment entity. But imagine AB ka holding company is there. Mummy Limited. Mummy Limited is in the business of selling air conditioners. The question is Mummy required to do consolidation? AB is not, see, this is my entire family. AB will not do consolidation because they're exempted because they're investment entity. But my holding company is M Limited. They're into business of selling air conditioners. Do they have to do conso? Yes or no? Are they investment entity? No. Whose investment entity? AB. So AB don't have to do conso, but mummy will do conso, taking AB and AB ko all children. A1, B, B1, B2, everybody. So mummy has to do conso. But if mummy also wants exemption, then mummy itself should be which entity? Investment entity. See, I am not teaching anything time pass. It is written in the answers. So generally, if you're an investment entity, they will not do conso because they're exempted. But its holding company has to do consolidation. If that holding company doesn't want to do consolidation, that itself should be which entity, guys? Investment entity. Understood? This exemption is given via Ind AS under 110. Okay. This exemption is given under Companies Act. Understood? 40% chapter over. Fast track batch. Crash course. So the main crux is this only. Have you understood what is exactly consolidation here? So there are two kinds of exemption. One exemption is under Companies Act. Other one is under Indies. So there are around 23, 24 questions. Out of 24, 7 to 8 questions are on this concept only. Exemption. Okay. Now I want to check your common sense. Let's see. Baby Limited. It's my wife ka company. So AB Limited has invested 55% here. Who will do conso? AB. Correct? Now imagine Niranjan. Niranjan Limited is controlling more than half of the board of directors. Imagine AB is not there. Niranjan Limited is controlling more than half of the board of directors of Baby Limited. Who will do conso? Niranjan. Again, AB has invested 55% in Baby. Who will do conso? AB. Niranjan is controlling more than half of board of Baby Limited. Who will do conso? Niranjan. Picture mein both is there. The question is now who will do conso? Who will do conso? Both. I will do conso because I have a stake in the company. He will do conso why? Because he is controlling more than half of the board of directors. So both will do consolidation. Understood? Who does the audit of CFS? Parent auditor. The other name for parent auditor? Principal auditor. Understood this much? So let's first read the basics. Then what has to be studied from where the chapter actually starts, I'll let you know. Okay. Page number 386 in the book. I think on every bench there's a book. Okay. So we'll be doing little marking in the book. People who will get the book later on, please you just copy the markings. Okay. So the first page is basically read only for understanding. It's not an exam content. Why consolidation? It says CFS is presented by a parent company. What's the other name for parent? Holding company to provide financial information of the group as a single economic activity. Now you tell me at final level, will they be asking definitions? No. Standalone FST. FST means financial statement. It means information about the single entity. CFS basically means information about the group. So this is the definition. Number two, if there is one or more subsidiary company, it should prepare CFS. Where it is written? Section 129. Please underline that section 129 and write there of Companies Act 2013. Then, for this subsection, subsidiary will include two people. Who are the two people? Joint venture and associate. Please underline that. That means CFS will be compulsory even if there is no subsidiary but the company have associate. Guys, at what percentage do we become subsidiary? More than 50. Right there, more than 50 below subsidiary. And what percentage do we become associate? More than or equal to 20%. Then the auditor should verify all subsidiaries. Circle the word all. All subsidiaries, JVs, associate have been included in CFS unless they meet a criteria for exclusion under dash Ind AS. Please underline that under Ind AS 110. Now you tell me who's exempted under Ind AS 110? Investment entity. Who's exempted? Investment entity. Then company shall also attach along with its FS a separate statement containing salient features of FS of its subsidiary or subsidiaries in form number AOC1. So when you upload to ROC, in that you will write the profit, the net worth, the reserves of your subsidiary. Okay. Besides AOC, you can write the accounts of company. That's the name of the form. Accounts of company 1. Then every company having subsidiary or subsidiaries shall place separate auditor accounts in respect of each of its subsidiary on the website. Plus, also give a copy of separate audited FS in respect of each of its subsidiary to any shareholder who owns it. Now, I have an example here they can test in MCQ. AB Limited. Now, imagine AB Limited ka member is Praveen. Now he's a member. Can he ask copy of AB ka SFS? As a member, can you ask the copy of FS from your company? Yes or no? Yes. AB has invested in Baby Limited. Now they have invested 55%. This becomes holding, this becomes subsidiary. The question is, can a member ask CFS ka copy? He can ask SFS. My question is, can he ask CFS? Yes or no? Yes. Praveen says, sir, I don't want your FS. I want baby ma'am ka FS. So my member, AB ka member is asking subsidiary ka FS. My member is asking not my FS, is asking subsidiary ka FS. Can he ask? Read point number 5th and tell me. He just read. Then the member of a holding company ask the FS of subsidiary. Yes or no? Yes. What's the logic? Why he can ask? He's an indirect shareholder. He gave money to AB Limited. AB Limited invested in Baby Limited. Eventually, his money also went to Baby Limited. So he's an indirect member there. So he can ask. So this level of MCQ they can make. So your concept should be very much clear. Because you're a member of a holding company invested in subsidiary. So you became indirect member of subsidiary. Okay. Please check out point number 6, whether you know it or not. We have discussed this also. Who will do conso? Both will do conso. Okay. Now, point number 7, right there important. It says according to Companies Accounts Rule 2014. One second. What is the year for the Act? 13. For the rules, it is always the next year, 2014. The CFS of the company shall be made as per the provision of Schedule 3 to the Act, underline Schedule 3, and the applicable accounting standards. Why do we write applicable word here? Applicable accounting standards. So you have to prepare CFS by following two things: Schedule 3 and applicable AS. Schedule 3, what is Schedule 3? Format of P&L balance sheet. Why do we write applicable word? Applicable accounting standards. There are two standards in India right now. One is AS, other one is Ind AS. So Ind AS is not applicable to everybody. You must have learned in your FR, it's in phase manner, right? Okay. So, but AS is applicable to everybody. So, if AS is applicable, you will follow AS. If AS is not applicable, that means to you, Ind AS is applicable. So, you follow Ind AS. So, that's the reason we are writing applicable accounting standards. Okay. You don't have to write a AS Ind AS. You will write the word applicable only. I'm telling you for your knowledge. However, a company which is not required to prepare CFS under Ind AS, which is that company? Investment entity. Okay. It shall be sufficient if the company complies with the provision of CFS as given in Schedule 3 to the Act. The implication of this I'll be explaining around 4:35 o'clock. This point is very much crucial. I'll be explaining you again this point. Okay. Just remember, exemption is given to two people. One is under Companies Act. It is given to intermediary subsidiary. What is intermediary subsidiary? A invested in B, B invested in C. So exemption is given to B. That is intermediary subsidiary. Then another exemption is given under Ind AS, but it's given to which entity? Investment entity. So exemption to investment entity is given under Ind AS, not under Companies Act. Again, I repeat, exemption under Ind AS is given. Exemption is given under Ind AS to the investment entity. Companies Act it is not written. So as per Companies Act, it says a company which is not required, which not required to prepare CFS under AS, it shall be sufficient if the company complies with the provision of CFS as given in Schedule 3 to that. So what is the implication of this line? We'll be doing it at 5 o'clock around. Okay, it is important. Please read point number 8, whether you know it or not. Have we done this? So there are three conditions. What's the first condition? They'll take NOC. NOC from whom? All the members or one member. And. Number two, what was the second condition? It is not a listed company or not wanting to get listed. What was the third condition? The ultimate holding company prepares CFS. So you are exempted under Companies Act. Under Companies Act. Okay. Now hold on. There's one more exemption ka question. Can you come to page number 394? Point number 12. Can you see exceptions to consolidation? It says as per Ind AS 110. Who's exempted? Investment entity. So see, an investment entity shall not consolidate subsidiaries. Instead, it shall measure it at, how do you measure? Fair value through P&L. So we call this as FVTPL. In FR, you must be using this word FVTPL. Okay. So that is done as per Ind AS 109 financial instruments. However, its parent, in my example, who was my parent? No, AB Limited ka parent, Mummy Limited. It shall consolidate all the entities. All means stop, everybody, the entire family that it controls, including those controlled through an investment entity subsidiary, unless parent itself is an investment entity. So if mummy wants exemption, mummy itself should be which company? Investment entity. Understood this much? Now this is the definition of investment entity. You need to write in the answer. See, because as a layman checker, I would not know what is investment entity. So this is the definition given in Ind AS. Please read this definition. Understood, guys? So we have done three answers. First is the basic one. Other one is the exemption. So exemption is under Companies Act, exemption under Ind AS. What's the number of Ind AS we have learned? 110. Okay. And when we talk about investment entity, for them 110 is not applicable. What is applicable? 109 is applicable. What is applicable? 109. What's the name for 109? Financial instruments. Okay. Now, now come to page number 389. Answer number 4 and 5. Now, answer number 4 talks about responsibility of parent. Once again, responsibility of parent means whose responsibility? Holding company. Okay, answer number 5, it says responsibility of the auditor of CFS. Parent company ka auditor ka responsibility. Both the answers are different. Huh? Now imagine, you must have done in your articleship also when you went to the client place. Now, subsidiaries, associate, joint venture. As an auditor, will you come to know how many subsidiaries company is having? Where are the subsidiaries? How many associates they are having? Whose duty is to identify? Company. Which company? Holding company, the parent company basically. So my first question says responsibility of parent. So the question would be direct. First, they will make a story. A Limited, turnover 1,000 crore, listed this much, net worth this much, full story. Directly, they will be asking you what is the responsibility of the parent company. So it says following are the responsibilities. So let's go by the story. Number one, identify the components. What will you say? Identify the components, including financial information of the components. What does components means? Subsidiaries, associate, joint venture. What does financial information of component means? The P&L, their balance sheet. So first I will see where are my kids. Kids means subsidiary, associate, joint venture. And how much profit they are earning or what is their balance sheet. So including the financial information of the components. Number two, identify reportable segment for segment reporting. My one subsidiary would be doing, let them selling idli vade. One would be maybe in tourism ka business. One subsidiary would be maybe in tech company. So I will check what segments. So identify reportable segment for segment reporting. Third, my subsidiary would be doing transaction with each other. It is called as what? Identify RP and RPT. What is RP? Related party. RPT means related party transaction. So I will tell to all my kids, you give me full information. Nobody will lie. So obtain accurate and complete information from the components. Fifth, make appropriate consolidation adjustment. What are the adjustment we'll be doing in the next 10 minutes? You say make appropriate consolidation adjustment. At home, generally when there's a family function, you have a family photo, like everybody has it. But at home, there is always one, maybe it's you or maybe your brother or sister or one cousin, who generally have to go very different way. Father is saying something else, but that child will be doing something else in life. Correct? So, but in the family photo, will you include him or not? He has to be included. It is called as harmonizing accounting policies and accounting framework. Harmonize basically means balance. You include him together. Okay. Now, there's something called gap conversion wherever applicable. Gap means generally accepted accounting principles. Like if you have a foreign subsidiary, those accounts will be prepared as per which FRF, which financial reporting framework? IFRS. As per their, like imagine if it is in UK. So as per UK ka law, they will follow. Which currency? Dollar. UK में it is dollar. Cryptocurrency. Okay. Amendment came. Okay. So if it's a foreign company, so the Foreign Act is applicable. Okay, foreign currency is applicable. But boss, consolidation is done in India. Holding company is in India. In India, we follow Schedule 3. We follow INR. So that foreign company has to convert them. So that conversion is called as what? Gap conversion. How many points are there? 7. In the exam, if this question comes, this has come a lot of times, okay? What is a holding company ka responsibility? How many points you will write? 7. How many pages you will fill? Because you become BCom student? Half. 7 points only. That's it. If you write the 8th point or the 9th point, see, writing more will not give you more marks. It will give you more attempt. I say I do not want quantity, it wants quality. In the module, only 7 points are there. How can there be a 8th point? But we are BCom student. First, we like to explain what is holding company. What is subsidiary company? Then what is the meaning of the word responsibility? Like as a child, I have a responsibility towards my father, towards my parents, right? Don't write that shit in the exam. Straight away question. Following are the responsibility of holding company. 1, 2, 3, 4, 5, 6, 7. That's it. 5 mark answer, 4 mark answer. Understood? Don't write more. Huh? If you write more, more attempts. Okay. So let's go this by it's in sequence. First, identify components. Who has to identify components? Company, including financial information. Okay. Number two, how are they doing business? It is identify reportable segment for segment reporting. Okay. Then they must have done internal transactions. Identify RP and RPT. I will ask them, whatever you are giving me, give me accurate. So obtain accurate and complete information. I've got all the information. I would adjust now. Do consolidation adjustment. Somebody is following something else. We will take him together. Harmonize accounting policy. Can you give me an example of different accounting policies? Like holding following something else, subsidiary following something else. Valuation methods are different. Okay, FIFO, LIFO, somebody following FIFO, somebody following LIFO. But eventually, you have to harmonize. If I have a foreign subsidiary, we say gap conversion wherever applicable. Straight away, this much answer only you have to write, no left, no right. Okay, this is a responsibility of which company? Parent company. Answer number 5. Responsibility of the auditor of CFS. Now, when I say auditor of CFS, I am referring to PA, principal auditor, parent auditor. Okay. So let's do this in a sequence. It also is very easy. First point is the last point. So it says the auditor should validate the requirement of preparation of CFS for the company as per applicable FRF. Now you tell me, when will be a requirement to prepare CFS? When will be there a requirement? when you are a holding company, when there is a subsidiary, correct? So first what you have to do, you have to validate the requirement. So write here number 1, at point number E, write there number 1. Then A point. Sir, if there's a requirement, number 2, to satisfy himself that the CFS have been prepared as per the requirements of applicable FRF. First, validate the requirement. You have checked the requirement, was CFS was applicable. Then check whether CFS is prepared as per FRF. Who has to prepare CFS? Parent company. We don't have to prepare, we are the auditor. Check whether they have prepared the CFS as per the FRF. Then, point number C is point number 3. At intermediate, if you remember some centuries ago, you have cleared you have done some section called as 143. In that there were 3 subsection. 1, 2, 3. Full Gajni. One is specific inquiry. 2 is true and fair view. 3 is reporting requirements. Do you remember this something? This will come again in audit report chapter. We'll be doing it. Okay. So I am just rewriting those same points again. 143.1, 143.2, 143.3. See point number C. To inquire into the matters as per section 143.1 of Companies Act. Then B wala point. To enable himself to express opinion. If you remember, what is our main objective? To express opinion that it is giving true and fair view. Where it is written to express opinion on true and fair view presented by the CFS, please write like this. As per section 143 bracket में 2 of Companies Act 2013. As per section 143.2 of Companies Act 2013. Please add that line missing there. As per section 143 bracket में 2 of Companies Act 2013. Fifth point is a D point. To report on the matters given in section 143.3 of the Companies Act 2013. Put a bracket there. Clear. Clear. If I have to frame this answer, I would say like this. My first point, validate the requirement. Second point, check it is prepared as per what? Whether CFS is prepared as per FRF. 3, 4, 5 is very easy. 143.1, 143.2, 143.3. What is 143.1? You have to do inquiry. 143.2, true and fair view. Go with the sound. 143.2, true and fair view. 143.3 talks about what? Reporting requirements. So guys, 5 points are there. Number 1, validate the requirement. Number 2, yes, requirement is there, check. It is prepared as per FRF. Then inquire into the matters as per section 143.1. Then check whether CFS is giving true and fair view as per 143.2. 3, check whether reporting requirements are followed as per 143.3. These 5 points are from whose perspective? Parent ka auditor. Parent ka auditor. Understood? Now, I'm giving you 5 minutes time. Read answer number 4 and 5. We'll be doing scribbling. We'll be writing the notes. Okay. Read 4 and 5 first. People who have book, read from the book. Who do not have book, read from the screen. So see, two answers are there. This is answer number 4, parent company. Answer number 5 is parent auditor. Okay. Now parent company. What is the responsibility of parent company? First, what will you do, sir? Identify the components. From components, what you will get? Including the financial information from the components. Then, what business are they doing? So, what will you say? Identify reportable segment for segment information. Now, are they doing internal transactions? So, you will say identify RP and RPT. Now, you have got all the information. You'll ask them obtain accurate and complete information. Then you have got all the information. Now you do make appropriate conso adjustment. Somebody is following something else, you will try to harmonize the accounting policy. Then foreign people, what will you do? Gap conversion wherever applicable. Now this is called a scribbling technique. Once you have seen the answer, you put it in your brain, you take a piece of paper, you write in your own handwriting, in your own language. Hindi, Kannada, English, French, whatever language you want to write. See, when you write on your own, the glimpse of it gets stored in your mind. See, there are 19 chapters, close to around 200 answers are there. Out of 215 will come in the exam. So you can't be a master of all the answers, right? So you need to do scribbling. Now, let's do this one also. Parent auditor. Can you give me first point for the parent auditor? First, validate the requirement. So I'm writing validate the requirement. Yes, sir, it is applicable. Then check. CFS is prepared. Who will prepare? Parent company has prepared the CFS as per what? Financial reporting framework. Third, I will write the section 143.1, then 143.2, then 143.3. First one was you will do inquiry of 143.1 areas. Then whether it is giving true and fair view, whether they have followed reporting requirements of section 143.3. Correct. So on a 5 mark answer, if it comes, teacher will give you 3, 3.5, 4. You don't have to write extra point because in the bare module they have given this much only. Understood? Now let's do one more answer, then we will write in the notes. Don't write, we will be writing again in the notes properly. It is a scribbling. So I was just trying to teach you how to scribble. You can write short form only for your understanding. Once you have prepared your notes, you take out one more notebook and you scribble when you're revising. Okay. Now come to page number 387. The most important answer is this one. Types of consolidation adjustment. Answer number 3, page number 387. How many people have done FR till now? They have did the tuitions of FR. I mean, FR you have started. Please raise your hand. Okay, you guys have started. Others, you guys have not started FR. Okay. So you will be learning this chapter in CA Final FR. It is basically the Mahabharata of the entire FR. It goes on, goes on. Mad teacher teaches. He keeps on teaching only. But the chapter never gets over. It's the most biggest chapter of the CA Final FR syllabus. Okay. I think, I don't know, Bombay may generally, all those mad FR teacher teach around 100, 120 sums. Close to 100 sums they teach. Every sum takes approximately 1 hour minimum. There's one teacher when we used to study, okay, long back. And by the way, I'm a chartered accountant. No? Yeah. Okay. So long back when one teacher was there, he used to teach one sum to us. Okay. Once the chapter is over, he used to call us. He called us for 2 days together back to back. It was a weekend class, 7 a.m. onwards, till the last breath of the teacher or the student, whichever is earlier. Whichever is earlier. Okay. So ideal time was 7 to 1:30, 2 o'clock, one day Saturday, and 7 to 1:30, 2 o'clock till the sum gets over. That was only one sum. One sum approximately 15 hours, 15, 16 hours. Only one sum we were doing it. Because that sum was a master sum. It included all the adjustments, all the data entry of the entire CFS chapter. So he was very clear. Because rather than studying full chapter, you just do one sum. In this sum, you will get every glimpse of all the adjustments, all the accounting entries, everything will come. So there were some mad people. They said, "Sir, why the hell you wasted 3 months of ours? You could have easily taught us just one sum." But teacher is always a teacher. He will not give you shortcuts at the start. He will give you towards the end only. So I don't know what is the current pattern right now, but in FR you will learn all these things. So whatever I'm teaching you right now, the accounting aspects you will learn in FR. I am teaching you from the auditor ka perspective. Okay. So one important question: what is the qualification for auditor? It's a question mark. What is the qualification for the auditor? Chartered accountant is wrong. That is not a qualification. Practicing chartered accountant. You have to be chartered accountant holding certificate of practice issued by the Institute of Chartered Accountants of India. Please give them respect. Okay. Now, so it says the auditor should verify that the adjustment warranted by the relevant AS, that is Ind AS 110, currently because Ind AS is applicable to us, have been made wherever required and have been properly authorized by the management of parent. So you will check the adjustments. So preparation of CFS give rise to two kinds of adjustments. What are the two kinds of adjustment? One is permanent consolidation adjustment. It is called as what? PCA. Other one is current period consolidation adjustment. It is called as CPCA. PCA, CPCA, PCA, CPCA. Now you tell me, what do you mean by the word in layman's language? Permanent. Permanent means permanent, permanent. I am not in video, talk to me. Permanent means you won't change it, it's fixed. Current period means it gets changed every year. Okay, now understand. The first time when I invested in baby, first time when I bought baby at home, okay, she came to my house. First time, first time. Which adjustment you will apply? Permanent. First time. Okay. Now, after that, every year, every night is same only. First night is every time special. First night is permanent. Every night is what? Current period. So every year she is my wife. I mean, she's my subsidiary. I have to do consolidation. So whatever adjustment we apply every year, it is called as what? Current period adjustment. What am I teaching you? Audit. I am not teaching you my life journey. Okay. I am teaching you audit only. People are imagining, oh, first night. See, permanent adjustment basically means when you acquire the subsidy for the first time. So what adjustments you will apply, it is called as what? Permanent consolidation adjustments. When you apply every year, it is called as what? CPCA, current period consolidation adjustment. Now imagine, first I had acquired 22% in one company, 22%. Imagine Katrina Limited, 22%. Who's she? Associate. He's saying Katrina, associate. But later on, I invested 55%. So from 22, my shareholding increased to 55. Now what did she become? Subsidiary. After some years, I invested 100%. What she became? Wholly owned subsidiary. So now when there was a change in shareholding, first she was my associate, then subsidiary, then wholly owned subsidiary. Then you tell me, out of these two adjustments, which one you will apply? PCA or CPCA? Which one you will apply? PCA or CPCA? PCA. You will apply what? Permanent. So what is the definition of PCA? It says these are those adjustments that are made on first occasion. First occasion means first time when you have acquired somebody, okay? Or on subsequent occasion when there is a change in the shareholding of a particular entity which is consolidated. So it is applicable twice at two places. Number one, on the first occasion when you have acquired. Number two, on subsequent occasion whenever there is a change in shareholding. You understood change in shareholding? From associate you became what? Subsidiary, and then you became wholly owned subsidiary. Okay. So what is the code? The code is ECG. E. Determination of equity attributable to minority, or NCI. NCI basically means what? Non-controlling interest. The other word for NCI is basically minority. So when you will be doing FR, people who have done FR, they know this. So the first question, the question will specify that A Limited has acquired 60% in B Limited. So out of B ka stake, 60% is of A. The balance 40% is of whose? Minority. The other word for minority is what? NCI. So whatever profit is there, that profit ka breakup will happen 60 and 40. So that is called as what? Equity attributable to minority or NCI. CG. What is CG? Determination of capital reserve or goodwill as per applicable AS. Determination of goodwill or capital reserve as per applicable AS. Now you tell me, in one company, can there be both capital reserve goodwill, or there will be either of it? Either of it. You can't have both capital reserve or goodwill. Either you'll have capital reserve or you'll have goodwill. But when you are doing CFS, you will have both. For example, A Limited may there is goodwill. B is also my subsidiary, they have capital reserve. C Limited is also my subsidiary, they have capital reserve. D Limited have goodwill. Now, when I prepare CFS, imagine I am AB Limited. When I prepare AB Limited ka CFS, I will not be showing two companies having goodwill, two companies having capital reserve. What we do? You net it off. So whatever is a higher amount, either it is goodwill or capital reserve. Okay. So, but in single company, there can't be both. It could be either of it. So my code is ECG. What is E? Equity attributable to minority or NCI. CG, determination of capital reserve or goodwill. CG, as per applicable AS. Then last point. The auditor should check that the pre-acquisition reserve have to be allocated appropriately between whom? Between the holding company and the minority. What is the other name for minority? So you have to write both minority or NCI of the subsidiary. If you write this answer, 1, 2, 3, 4, 5, 6, 7 lines. 7 points, 7 lines will only be filled. 4 mark answer it is. We need to remember the adjustments. First, tell me the definition. When do you apply PCA? When do you apply? First occasion, when you have acquired, or subsequent occasion, whenever there's a change in the shareholding. That's the definition. Now, what are the adjustment? The code is ECG. What is E? Equity attributable to minority or NCI. What is CG? Capital reserve or goodwill as per applicable AS. Then auditor has to check what is the portion? Pre-acquisition reserve. What is the portion? Pre-acquisition reserve has been allocated between two people. Who are the two people? Parent and minority. What is the other name for minority? NCI. Understand the answer, write it in your own words, cover all the points, you will get marks. You can easily write the answer in your own words, but make sure you cover all the points. Okay. CPCA. What is the full form for CPCA? Current period consolidation adjustment. What is the code? If paise. What is the code, guys? If paise. Now, these are those adjustment which is made in accounting period. Accounting period basically means every year. Every year for which CFS is made. Now, this is a full list of if paise. See, old time mein, the pattern was very bad. Like when we studied, I cleared way back. November 2011. It's been 16 years for me to be a chartered accountant. Okay. November 11. Now, at that time, the pattern was very weird. We had like 8 mark ka question, 12 mark ka question, 16 mark ka question. At that time, the pattern was very weird. Right now, it is patterns fixed. 5 mark ka question, 4 mark ka question. Now, imagine this is a full list of if paise. I mean, CPCA ka. Ideally, you are not supposed to write everything. You'll cover around 7, 8 points. But because MCQ is there now, so you should know all the pointers. Okay. See, in the entire chapter, there are only 2 adjustments. What are the 2 adjustments? What are the 2 kinds of adjustment in this chapter? One is permanent, other one is current period. Permanent ka only 2 items are there. What is E? Equity attributable to minority or NCI. CG, capital reserve goodwill. These 2 are permanent. Leaving these 2, everything else is what? Current period. See, they will frame the question among this only, na. See, I'm talking about from the perspective of MCQ. Now, you have to be a little sharp. You can't mug up MCQs, but you can mug up the brief answers. Okay. Now, these adjustments are made every year. Have you done amalgamation chapter in intermediate? Amalgamation. So similar to that only, what is consolidation? Amalgamation it is 2 different company, A limited, B limited. It's just one time entry. In holding subsidiary, those amalgamation is every year. Every year they have to do consolidation. Okay. But the concept is similar. I. Intra-group interest paid and received or management fees. When will interest come? When this line will come? When will you have interest ka adjustment? Borrowings. Who have given borrowings? Who have taken borrowings? Holding has given it to subsidiary or subsidiary given to holding. So it is intra-group interest. The first one is interest. F. In case of foreign component. Now imagine Niranjan. Niranjan is my subsidiary in Uganda. You know what is Uganda? Where is Uganda? It's a country. Where it is? Africa. Very beautiful place. Now, Uganda people will prepare the accounts in which language? There. There means what? Ugandi. In India, we have Punjab, Punjabi, Gujarat, Gujarati, Uganda, Ugandi. In India, we follow which currency? INR, Rupiah. There, Ugandia. Now, if those subsidiary have to bring the back accounts here in India, because consolidation will be done in India only, it will be done as per which currency? INR. Which language? English language. They have prepared the accounts in which language? Ugandi. Do you understand Ugandi? No, you have to convert. You have to convert them into Indian language, Indian currency. So it says in case of foreign components, adjustments to convert component का audited FS prepare under component का local gap. Local gap means Uganda का gap, okay? To the gap under which CFS is prepared. CFS is prepared under which gap? Indian gap. In case you can't remember this whole line, simple words in case of foreign components, gap conversion wherever applicable. What will you say? Gap conversion wherever applicable. P. Unrealized profits on assets acquired from subsidiaries. If a holding company is selling its machine to subsidiary, understand, holding company is selling its machine to subsidiary. 100 rupee ka machine was a WDV is 100 rupees. We sold at 120 rupees. We'll have a gain. Now, when we have a gain, so that gain will come into my PNL. Now, when the gain comes to my PNL, boss, in subsidiary also 51 rupees is mine only, na? Holding subsidiary 51 is also mine, correct? So, how do you do that? You learn in accounts. Here we are learning the audit ka perspective. So, was profits on assets acquired from subsidiaries. A. Adjustment relating to harmonizing different accounting policies. Valuation ka policy is different, investment ka policy is different. Being followed by parent and its subsidiary. I. Intra-group indebtedness. What is indebtedness means? When do you owe? This is a hot favorite adjustment in FR. Data creditor. If holding company is buying some stock from subsidiary or vice versa, so they will be standing in the books like a debtor as a creditor. That is called indebtedness. Let's do again. What is I? Intra-group interest paid and received or management fees. What is F? In case of foreign components, what will you say? Gap conversion. Gap conversion. P. Intra-group profits on assets acquired from subsidiary. Machine being sold. A. Adjustments relating to harmonizing different accounting policy. I. Intra-group indebtedness. That's data creditor. S. Adjustment made for the effect of significant transaction. Significant transaction or the events that occur between the date of FS of parent and its components. Adjustment for significant transaction between date of FS of parent and date of its component. Can you tell me in India, we follow accounting year or financial year? Both are same. Common sense, both are same. Okay. Now, what is the year basically? April to March. Now, generally in India, April to March is accounting year for everybody. But this line, when you read this line, it says adjustment for significant transaction between date of FS of parent and date of FS of components. Ideally, April to March is for the holding company, April to March is for subsidiary. But they are saying the dates are different. When it is practically possible, if it's a foreign subsidiary. So foreign subsidiary, they follow, maybe they will be following calendar year there. But in India, what do we follow? Financial year. So in FR, you will learn that for that Jan, Feb, March, 3 months ke liye, you have to pass some entries and extend that December ka accounts till March ka accounts. Because you have to be in line with the holding company. So whatever adjustment you do, this is this point. Adjustment for significant transaction between date of FS of parent and date of its components. Understood? Now, do you know what is subsequent event? What is subsequent event? After balance sheet, but before audit report date. After balance sheet date, but before audit report date. So it says adjustment to the FS or recognize subsequent event that occur between the balance sheet date and date of audit report. So there are two S. One is significant transaction when the dates of the components and the parent is different. This one is subsequent event. What is the definition of subsequent event? After balance sheet but before audit report date. In intermediate, you must have learned subsequent event are of two kinds, adjusting and non-adjusting. If it's an adjusting event, what do you create? You adjust it, basically provisions you create. Okay, non-adjusting mein disclosure by way of note. Okay. So this is this definition only for subsequent event. E. There are two E's. One is same. Determination of equity attributable to minorities. So every year profit will be coming. That profit will be bifurcated between the holding company and the minority. That is equity attributable to minority. One more point is there, if you can remember, adjustment for deferred tax on account of temporary differences arising out of elimination of profit and loss. So you can write this much, adjustment for deferred tax on account of temporary differences. You must have learned AS22 timing differences here, DTA, DTL we create. So just remember this deferred tax ka one more adjustment is there, it falls in CPCA. How many items are there? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 points are there. In the exam, if it comes as a question, at least 6 you need to write. Let's try remembering it again. What is I? Interest paid and received or management fees. F, foreign component. When do we have, I mean, in foreign component, what will you do? Cap conversion, if done. P, intragroup profits on assets acquired from subsidiaries. A, adjustment for harmonizing different accounting policy. I, intragroup indebtedness. S, significant transaction between date of FS of parent and date of its components. One more S, adjustment for subsequent event. Then E, E is what? Equity attributable to minorities. One more E, I mean, this is just a point, adjustment for deferred tax. 9 points are there. Understood? How many kinds of adjustments are there? Two. One is PCA, other one is CPCA. When do you apply PCA? First occasion when you acquire. Number two, subsequent whenever there's a change in shareholding. What's the code for that? ECG. What is E? Equity attributable to minority or NCI. CG, capital reserve or goodwill as per applicable AS. Then one more point was there. You have to see that pre-acquisition reserve has been allocated between parent and minority. Then CPCA you apply every year. What's the code? If I say, what is I? Intragroup interest. F, foreign components के लिए gap conversion. P, profits on assets acquired from subsidiary. A, harmonizing accounting policy. I, indebtedness. There are two S. One is significant transaction between date of FS of parent and date of its components. One more S is subsequent event. You can write in your own words. Subsequent event means event happening after balance sheet date but before audit report date. There are two E. Equity attributable to minorities. Last one, before tax adjustments. So you cover all the points, you will get marks. Understood? 50% chapter over. Now, I have a question for you. Can you answer this for me? One second. This is September का paper, okay? The latest September 25 paper. September 25, ठीक है? Final exam September 25. Let us see whether I have taught you correct things or not, okay? You please do the audit now. Question number 3. Which of the following is not a CPCA? Choose. Tell me what it is. C. Let's check the answer. Everybody see. If you remember the code, ECG, this was found where? PCA. They're asking which is not a CPCA. That's logical. Everything else is what? CPCA. Rika is C. Let's see. Rika is C. Rika is C. What teaching? This is September. May also it came. Same number, third question only. Okay. This is the story. First, let's read the story. Acha, and the best partner, we have not read the story also for that previous answer. There was a big story. Okay. This is an actual game of final audit paper. If your concepts are very much clear, you can skip the story, jump to the question. At times you have to read. But trust me, if you follow my techniques, you will easily answer 20, 22 marks ka correct answer. The only fight is for the last three or four questions. 11 answers I'm telling you, it will be right. Only 3, 4 because see, even I can't predict, even you can't predict. It's upon your understanding, how well you have understood the concept. Okay. This is May 25. U Limited is a partially owned subsidiary of S Limited. A manufacturing company has been operating as an unlisted company in India. The company shareholders, including non-voting members, have been informed in writing about the company ka decision not to present CFS. You have heard this story somewhere. That they will have been informed in writing about the company ka decision not to present CFS. None of the members have objected. They have not objected. That means what they have given? NOC. They have given what? NOC. And the company holds proof of delay for this communication. Now, Saturn Limited, the ultimate holding company of Uranus Private Limited, files its CFS with the ROC in compliance with the applicable AS. That means the main holding company is preparing the CFS. Saturn Limited is listed on NSE and others to India's for its reporting requirement. So if you see, they are going in the planet. Our planet is very bad. So there's a company called as Saturn. There's a company called as Uranus. On reading this much, you tell me who's the holding company? Saturn. Who's the subsidiary? Uranus is a subsidiary. They are saying partially owned subsidiary. When I say partially owned subsidiary means 51%. Wholly means 100. Either they may use a word subsidiary or a partially owned. Partially basically means 51 only. Okay. Now, Pluto is another subsidiary of Saturn. Pluto is another subsidiary of Saturn that manages fund from various investors with a stated business objective of earning return. You have read this line also. Earning return through capital appreciation investment income. It evaluates its investment on a fair value basis, reporting these changes through PNL. 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 Pluto holds 75% of shares in two companies. Neptune is 75, Eris is 60%. So Pluto became which company? Investment entity. Correct? Now, during a regulatory review, issue arose regarding the applicability of CFS and the exemption under Companies Act and Ind AS. So if you remember that Ind AS exemption, they have attracted Companies Act exemption also. So you don't have to rack your brains right now. You have to see what question they have asked. Which of the following is most appropriate regarding the applicability of CFS and the exemption under Companies Act and Ind AS? This is the diagram. This is the option. Choose. Tell me. D everybody? Why D? Saturn is the holding company. Is it investment entity? Whose investment entity? Pluto. If the question was from the perspective of Pluto, so Pluto has to take exemption. But if you remember the example, Mumbai Limited, AB Limited ka holding company has to do conso. That means this much is clear. Saturn has to do conso, taking Pluto. Now, why they have to do Uranus also? It is just a subsidiary. If you remember my example, A, B, C. If B is intermediary subsidiary, then they would get the exemption. Correct? Everybody answers D? I don't know. Let's check. Third ka is D. Third ka is D. Right, it is. Are you getting confidence? So whatever I have taught you, I have taught you correct things only. It's see now this level of question you will not find in MC. I mean in the module. There is no question like this. It's all on your concept. If your concept is clear, your MCQs are very much easy. So make our 2 mark we have done. We have done September ka 2 marks also. Out of 100 marks, how much we have scored? Only 2 marks we have scored. Okay. So let's take a small break of 5-10 minutes. Or you want a big break right now? Please talk to me. We are humans. We can take break. I don't mind if you don't want break. It's okay. You want break, okay? Yeah. Mentally, physically tired, na? I'm also paining now. So let's take a small break. I'll give you a big break around 6 o'clock. Is it fine? Class is till what time? 9 p.m., 9:30, 10, 11. Let's sit. What you will do at home? Homework. Okay, let's take a 5, 10 minutes ka break right now. Then I'll give you a big break around 20 minutes, approximately around 6 o'clock. Okay, let's meet in 10 minutes. Thank you. Guys, let's meet in 10 minutes. We have done point number 1, we have done 2, we have done 3, 3A we have done 4, we have done 5. Okay. Can you see auditing the consolidation? That's on page number 389. Write their word RTP. Write the word RTP. RTP means read if time permits. There are certain questions which are only read, not an exam content. Write the RTP. Read if time permits. Okay. Now come to point number 7. Can you see reporting? Write there important. Now, so reporting answer, guys, it is till next page 391. Yeah, till full 391. First, let me teach you this 5 situation, then you read from the book. So reporting. So reporting is important. In the exam, they will not ask you all the 5 situation. They will ask you 2 marker 2 situation or 3 marker 2 situation basically. Let's read the probabilities. What are the 5 different independent situations? When parent auditor is also the auditor of all of its component. Means how many auditors are there? One. I am only auditing holding company. I am only auditing subsidiary. Okay, one auditor. When parent co-auditor is not the auditor of its component. When parent co-auditor is not the auditor of its component. What does this mean? So holding auditor is separate and subsidiary co-auditor is separate. Okay, important provision. I mean, this is important. Third, when the component co-auditor reports on FS under accounting framework different than that of parent. Means one company is following different accounting framework, component is following different accounting framework. When that will be possible? Foreign component. India may we follow Indian gap, correct? UK may they follow UK ka gap. Okay, that's accounting framework different. Then D, when the component auditor report under auditing framework different than that of parent. That is basically when the auditing framework is different. Okay, this is fourth situation. E, component not audited. In India, you tell me audit is mandatory or not mandatory? Audit in India, audit is mandatory or not mandatory? You're gonna be the most funniest chartered accountant which the country has ever produced. You will become chartered accountant very soon. In India, if you are a company, audit is mandatory. Once again, when I say subsidiary, it is always assumed subsidiary has to be a company. When I say associate always have to be a company because when you acquire, you buy shares. Shares concept is in which form of entity? Company only. So every time company has to be audited. But what are we saying here? A component is not audited. So ideally in the exam, in the past, what they had asked, either B situation or E situation they have asked. Either B or E. Now hold on. Now there are 5 independent situations. First, let me teach you. So this is the handwritten notes which we will be copying later on. It says when parent and component co-auditor is same. That means one guy. So what do you have to see? The auditor should check the compliance of applicable AS or Ind AS or FRF. What does FRF means? Financial Reporting Framework. That's basically Schedule 3. Okay. Then he has to report true and fair view. True and fair view of what? Consolidated balance sheet, consolidated P&L, and consolidated cash flow statement. So when the auditor is same, he have to see the compliance of all applicable FRF. Plus, he has to report on true and fair view of the consolidated P&L, balance sheet, and cash flow. B, when the parent co-auditor and component co-auditor is different. That is basically Niranjan is auditing holding company, Praveen is auditing subsidiary. Okay, two people are different. So this have come in the exam long time ago. The parent auditor will state the division of responsibility. The parent auditor will say division of responsibility by giving the percentage and amount of sales, assets, cash flow. Sales, asset, cash flow means out of 100 rupee ka asset, 60 rupees ka audit I have done, 40 rupee ka is done by the component ka auditor. 60% audit I have done, 40% is done by somebody else. So who has to give this division of responsibility? Parent auditor. There are three things. I have written the code SAC of the sales, assets, cash flow. Sales, assets, cash flow. Then there is one more point. It says division of responsibility is not construed as a ground of qualification. I'll be teaching you, I think by Sunday or Monday ka class will be starting with a chapter called as audit report. Okay. In audit report, I'll be teaching you opinions. If you have little idea in intermediate, you must have studied. In India, how many kinds of opinion are there? In India, how many kinds of opinion are there? There are only two kinds of opinion. What are two kinds of opinion? Unmodified and modified. Correct? If everything is perfect, unmodified. If there's a problem, modified. Then you give qualified adverse disclaimer. Okay. I am holding co-auditor. Let us assume Praveen is subsidiary co-auditor. Now, subsidiary co-auditor is somebody else. I too have not audited. Can I write in the CFS ka report, I am qualifying the report because subsidiary accounts have been audited by somebody else? Is it a wrong thing by the company? Is it a something wrong? Have they done something wrong in the financial statement? No. When do you give qualification? When there is a problem from the company ka side. Just because of the fact that subsidiary order is different, can it be considered as a ground for qualification? No. So division of responsibility is not considered as a ground for qualification. Where do you write division of responsibility? So division of responsibility will be stated in one para. Which para, guys? OM para. What's the full form of OM? Other matter para. As per which essay? 706. Other matter para as per essay 706. Okay. What is other matter para? Why do we write in other matter para? We'll be learning on Monday ka class when we do audit report chapter, Monday, Tuesday. Okay. 3 points, very important. When the auditor is separate, so the parent auditor, will have to give that separation. That is called as division of responsibility. Stating two things. Percentage also, amount also of three items. What are the three items? Sales, assets, cash flow. Can it be considered as a ground for qualification? No. Division of responsibility. Parent co-auditor will mention in which para? Other matter para. As per which essay? 706. Understood? September 25, the latest exam. The question came from this concept only. And it is there in our book also, which came in the exam. I'll show you later on. Okay. Third, when the accounting framework differs. Guys, accounting framework differs. That means UK people are following something else, India people is following something else. Holding company is in India. So conso will be done as per India only, correct? India only conso would be done. So UK people, you have two options. So from the inception, that means from the start only, you follow group accounting policy. What do you mean about group accounting policy? UK का policy or India का policy? India का policy. So from start only, you prepare accounts as per Indian GAAP. Because ultimately, you have to do conso with India only. But UK people are saying, no, 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 we will prepare as per our local GAAP. Our local GAAP means UK ka GAAP. Now accounts are prepared as per local GAAP. Those accounts will come to India. Now company has to convert them into from their local GAAP to which GAAP they have to convert? Indian GAAP, correct? So auditor, you have to verify those conversion entries. Who will convert the accounts? Management of the holding company. So you go and check the conversion entries. So there are two ways. It says when the accounting framework differs, if the component follow group accounting policy, that means they are preparing from start only Indian GAAP. So the auditor should decide whether to rely on the local auditor of component or not. That means UK ka auditor, whether you want to rely on that auditor or not. Number two, if the conversion entries are passed, the auditor has to verify what? Conversion entry. Who will pass conversion entries? Management of holding company. Then, when auditing framework differs, in India, we follow only one gas. Which gas? Indian gas. What is gas? Generally accepted auditing standards. Which standard, guys? Auditing standards. So whatever audit they are doing it, I don't care. We follow only Indian gas. Indian gas basically means generally accepted auditing standards. Waste point. E. Very important. When the component is not audited. The ideally subsidiary ka audit has to be done because if it's a company audit is mandatory. If it is not done, when the component is not audited and it is material means significant, important. The auditor will modify. The auditor will modify audit report as per which essay? 705. Guys, modify means what? So always remember in layman ka language, modify means what? Change. But in auditing language, when I say the auditor will modify the audit report, basically means either he is giving qualified report or adverse report or disclaimer report. Okay. As per which essay? As per essay 705. Considering both qualitative factors and quantitative factors. That means he has to give the number also. What is the turnover of that subsidiary? Okay. Why are we not consolidating it? Because it is not audited. So you have to give details also. You have to give numbers also. So this is component not audited. Understood? So five independent situations out of which B and E have come in the exam. And ideally there's a conceptual thing on B and E only. Okay. So open the book right now. What's the page number there? 390, I think, right? So read one by one. You can use these short forms. Okay. I'll be scrolling slowly, slowly. Don't write. We'll be writing same in the notes. Okay. Just read reporting wala concept. Finish. In that point number B and E, both mark as important. Point B and E. Component not audited. And B1 is when the parent auditor is not the auditor of the components. What will you say? The FS of all the components in these, including CFS, should be audited. If it is not audited, the auditing report on CFS should consider unaudited components in evaluating a possible modification. Okay, if it is material, then only you will modify. In such a case, the auditor will consider what? Both qualitative and quantitative factors on the possible effect of such amounts remaining unaudited when reporting on CFS using the guidance as per SA 705. What is the name of 705? Modification to the opinion in the independent auditor's report. It's the name of the essay. Modification of the opinion in the independent auditor's report. Understood? B and E important. What was the section number what we studied? In the entire chapter, I've just taught you one section number. 129. Two Ind AS ka number we have learned. 110 talks about the CFS. Okay. And for investment entity, CFS is not applicable. They have to route it via FETPL. Where it is written? 109. 109. Okay. I will write division of responsibility. Like parent auditor will write division of responsibility. In which para? Other matter para. As per which essay? 706. If component is not audited and it is material, as a holding auditor, what I will do? Modify. I will do modify as per which essay? 705. Understood this much? Let's do one more answer, then we will be writing. It says, question number 8. What are the specific procedure in auditing the CFS? Please circle the word specific procedure. Specific. And write there a code. Iska PJ works. Right there. Iska PJ works. ISCA PJ works. Now see. Iska PJ works. The question is, what are the specific procedures to be followed by the auditor in respect of completeness of the information received from the management while auditing CFS? So see, they will give you a lot of story. The question is specific procedure regarding completeness of the information. In a holding company, there are 5 subsidiaries or there are 50 subsidiaries. Who will give me information? As an auditor, I will get information from whom? Management of which company? Parent company, holding company, correct? So whether that information what they are giving is correct or not, it's complete or not, I need to verify. So how do I verify? Following should be checked. Iska PJ works. I review the investment of parent as well as of components. Why would I review investments? Why we should go and review investment? Because holding company must have made subsidiary. At what percentage do you become subsidiary? More than 50. 51 is wrong. Okay. If they have made associate, what percentage do you become associate? Minimum 20%. Correct? So you go and check the investment. S. Review the statutory records like register under section 186. It's an investment register. You go and register, verify the statutory records. C. Identify the changes in shareholding. Why do we have to see changes? What's the use of getting change? If it was 18%, it was just an investment. If imagine this year they made it to 22%, so what it must have become? Associate. So you will go and check the changes in shareholding. Then review other arrangements. If it was a subsidiary or associate or joint venture, you go and check other arrangements. P. Review parent ka procedure for identification of various components. How company identifies its component, you will check those procedures. J, review joint ventures and joint arrangements. See, joint venture mein there is no exchange of shareholding. For example, my company and Niranjan ka company, we want to build a building, construct a building. So we have got together. We are not collaborating. We are not putting investment in his company. We are putting our resources for one building. You must have learnt in your 12th standard joint venture account. So what does joint venturers do? They don't share each other ka shareholding. I am not investing in his company. He is not investing in my company. We are just building a building. So we'll put all our resources. Whatever revenue we earn minus the cost will be divided in the ratio what we have decided. So check the joint ventures and joint arrangements. Works. Review working papers for the prior years for the known components. Additionally, the auditor should make inquiry with the management to identify new components. See, it's not compulsory that the subsidiaries would be same every year. Company must be changing it. They must be liquidating some subsidiaries. They may be acquiring some subsidiaries. So you go and make inquiry with the management whether to identify new components or not. So my code here is ISKA PJ works. What is I? Review the investments. S, statutory records like registered under section 186. C, identify changes in shareholding. A, review other arrangements. P, review parent ka procedure for identification of various components. J, review joint ventures and joint arrangements. W, review working papers for the prior years for known components. And last, additionally, he should make inquiry with the management to identify new components. The hint for this is only one word, specific procedure. So ideally in the entire chapter, you'll be having around 13, 14 answers. So in 13, 14 answer, every time I'll give you a code. Like reporting, reporting is a code there. Okay, adjustment made, you know, it is PCA, CPCA. If this says you have acquired for the first time, which adjustment? PCA. Every year you have to make adjustment. CPCA. Here the code is specific procedure. Understood? Cool. Open your notes. Let's write this first. Okay. So that you'll get little confidence. So give the heading as group audits dash 4 to 8 marks. First chapter in your CA final journey audit paper. Chapter number model met is I think 8. No, 13. 1 second. So whatever number I have done in the book, it's as per module only. Chapter number 13, group audit. As per module, it is chapter number 13, group audit. Dash 4 to 8 marks. Copy. Question number 1 from the screen. Please understand and write. And if you're not understanding, please ask me. Is question number 1 done? Done? After this, please draw this so you remember when you're studying, when you're revising. AB Limited will not do conso because it is investment entity, and draw like diagram like this. But mummy has to do conso. I hope you understood the diagram. Question number three is responsibility of parent entity or responsibility of parent company. Copy. Have a difference of each added together. What business they're earning money. A report. Question number three done. Question number 3 done. Everybody? One, two, three. You have learned in this. If you have written, it's okay. Or else you can make this as third point, this as fourth point, and this is fifth. 143, 123. Becomes easy to remember. Look, if you have written in that way, you can copy the same. Next. And this I can see written. Snacks. Ready? Done. Rest told. Now this question, either you can write left and right together, or you can first write PCA. Afterwards, you can write CPC. It's your wish, okay? This is full page. The types of console adjustment. You want to write side by side or you want to write upside down? That's your call. Understand and write. You're writing simultaneously. Let's scroll up. There's a change in right. Following are the adjustment. You're not getting any point, please ask me. You have written in CP. Write the ninth adjustment also adjustment for deferred tax. Done? Anybody still writing? This was question number what? 5. Now, this way I have not taught you, I'll just explain you right now. It says examples of WR. Examples of WR. WR basically means written representations to be obtained from management while auditing CFS. So, what are the examples of written representation you will take? So, I will not teach you anything new. Let's read this answer. You tell me from the notes till now, whatever you have written, which answer should fit in. First one. As per SA 580, that's the number for written representation. The auditor should obtain following WR from the management. Number one, completeness of the components included in CFS. Number two, identification of reportable segment for segment reporting. Number three, identify for RP and RPT. And appropriateness and completeness of the consolidation adjustment, including elimination of intergroup transaction. Which answer is similar to this? Responsibility of parent company. See, it's logical, na? Management is responsible. Whatever is your responsibility, you give me in writing. When they give me in writing, that paper is called as what? Written representation. So in the exam, if you are confused, you have forgotten the content. Remember management ka responsibility. Whatever is the management ka responsibility, that they will give in writing. When they give us in writing, that becomes what? RWR. Okay. When you write this answer, you write there similar to what's the question number? 3 or 4? Three. Similar to question number 3. Parent company ka responsibility. Okay. Right. Copy 6 and 7. Question number 6 over. Everybody? Okay. If it's not a subsidiary, if it is less than 20%, neither it's an associate, it is just 18%. So it's basically other investments. It depends upon what arrangement it is, a subsidiary, associate, JV, or just an investment. So you just have to check, because here we are talking about whether management has given us complete information or not. We say review other arrangements where the company has made just investment. Imagine if I buy 2% equity of Reliance. So Reliance is neither my associate nor my subsidiary, but I have done a 2% ka investment. You will see whether it's an investment, just an investment, or an associate or JV. Done? This was question number 7. This is also pending. Let me just teach you this. It says, what are the disclosure in notes to be given in separate FS but not in CFS? Now, if you remember, like generally what happens in consolidation, if this is AB Limited ka FS, okay? So a set may imagine they have machinery, they have computer, this is 100 rupees, this is 40 rupees. This is AB Limited ka FS. In that they have given a set, machinery is, let us assume 20, computer is 5. So when we prepare CFS, so we do line by line addition. Basically, how do we show? So machinery will be shown as 120. So you basically add. Computer will be shown as 45. Basically, you add. Okay, this is basically the basic requirements of CFS. So whatever assets, whatever liabilities are, you just add it up. Okay, and then you prepare the CFS. Now the question is, here in AB ka FS, below AB ka FS, 1, 2, 3, 4 notes are there. Okay, below baby ka FS, it is 1, 2, 3. So this is 4 notes, this is 3 notes. Now, when we prepare CFS, so what I told you, you will add line by line item, correct? Now the question is for the notes. Should you add 4 plus 3, you will write 7 notes or only the relevant notes for CFS? Tell me. Like for the assets, I told you, you have to add everything line by line item. So for the notes ka part, you will add 4 plus 3 is 7 or you will just add relevant notes? What you will add? Only relevant notes. Now this notes also, it says, what are the notes? What are the disclosures shown in notes to be given? To be given in separate FS, but not in CFS. That means there are certain notes. There are certain notes which come only in SFS, not in CFS. This have come, I think, twice, thrice. Thrice in the exam as descriptive answer. Plus, they can ask us to identify an MCQ. These are the notes which comes in SFS, not in CFS. First one. Sources from which bonus shares are issued. Can somebody tell me what are the sources from which bonus shares are issued? Which reserves? Reserves. General reserve is free reserve. What else? Check your screen. Very good. One more is there. CRR. Capital Redemption Reserve. So from wherever you have used the money to give bonus shares, you will write only in SFS but not in CFS. Okay. Number 2. Unutilized monies of public issue. Unutilized monies of public issue basically means when we come for IPO. Okay. We get the money. So till that time we have not utilized the money, we need to inform to SEBI. Like every quarter we have to give a report. 100 crores, 1000 crores we have raised. 200 crores ka we have bought machine. 300 crores ka we have repaid our loan. So every quarter we have to give a report. So that unutilized money, whatever is left out, you give only in SFS, not in CFS. Number 3, disclosure under MSME Act. What is MSME? Micro, Small, Medium Enterprise Development Act. You don't give in CFS, only in SFS. Oh, so 4 and 5 is brother of each other. Value of imports, value of imports. Calculate on CIF basis. What is CIF? Cost, insurance, freight. Or what all? Raw material component and capital goods. See, this disclosure you have to give only in SFS, not in CFS. Now, same way value of imports of raw material, spare parts and components consumed. Here it was raw material, here also raw material. Here also components, here also components. Here it was spare parts, here it was capital goods. It's both similar to point. Okay. Sixth and seventh, again related to each other. Expenditure in foreign currency, earnings in foreign currency. Expenditure in foreign currency, earnings in foreign currency. For what all? Royalty, know-how, professional fees. Here also same point, royalty, know-how, professional fees. These are also given only in SFS, not in CFS. Eighth, amount remitted in foreign currency on account of dividend given to non-resident shareholder. If there's a foreign investor in my company, okay, we will be giving dividend. That dividend will be going in INR or foreign currency. If I have a non-resident shareholder, basically means an outsider, so I need to pay dividend to him. That dividend will be going in INR or foreign currency. Foreign currency. So whatever money you are sending it, you need to give a disclosure in SFS. That is not again repeated in CFS. So these are the 8 points which comes only in SFS, not in CFS. Okay. They can ask us to identify an MCQ also. Three will be from here. One would be something else. Odd man out. Or three would be something else. One would be from here. So your concept should be very much clear. This disclosure, this 8 points will come only in SFS, not in CFS. As a descriptive answer, it has come thrice in the exam. Okay. Copy. Question number 8. And write the important also. Question number 8 over. Probably question number 9. NR shareholder means non-resident shareholder in question number 8. Amount remitted in foreign currency on account of dividend to non-resident shareholder. Wala part done. DOR is division of responsibility. Done everybody? Last part. TD. Done? What's the full form of gas? Generally accepted auditing standards. GAP is generally accepted accounting policies. Okay, and gas is generally accepted auditing standards. Now we are left with two answers from here. Then the chapter gets over. Okay. Now, shall I finish those two answers? Then we'll go on a break. Okay. After that, there's one standard left. Okay. I mean, which is related to this chapter. Okay. So post break, we're going to do that standard also. Now, the next answer is we'll do from the main book later on. It says use of materiality in CFS. The use of the word materiality. What does the word material means? Significant, important. Okay. Now imagine you are the auditor of Reliance Industries Limited. Okay. Now, when you talk about Reliance Industries Limited, they have, I think, more than 50, 60 subsidiaries, 70, 80 associates, 30, 40 joint ventures. They have huge. Okay. I was reading one company. Have you heard about Edelweiss? Edelweiss. I don't know how do you pronounce Edelweiss. Have you heard about this? It's a NBFC. Okay. They have 376 subsidiaries. In the exam, we just have a question of one subsidiary where we have to do consolidation. Okay, like A limited, B limited, do conso. Imagine the situation of the auditor who's auditing this company. 376 subsidiaries are there. Okay. Now, obviously, not every subsidiary ka it's practically possible to do consolidation. He need to choose between what is material, what is not material. Who will do the consolidation ultimately? Management. Now, from the auditor ka perspective, it's not possible for us to go and check every subsidiary. So to decide whether I should go and check this subsidiary or I should not go and check this subsidiary depends upon my heart. Heart basically means auditor ka heart. Auditor ka heart basically means professional judgment of the auditor. Whether the subsidiary is material or whether the subsidiary is not material. Like, as a teacher, I will tell you, okay, don't do this chapter. Okay, if you are not doing this concept, this chapter, that is immaterial as per my heart. So imagine out of 100% syllabus, I told you don't do 5% content. So as per me, 5% is immaterial, 95% is material. But out of that 95, your heart will also say something, right? Teacher though is mad. Out of that balance 95, we will do only 50%. This 50% is material for me, other 50% is immaterial for me, right? So the materiality differ from person to person. Okay, my idea was to explain you that the materiality word differ from person to person, like judgment differ from person to person. So it says, what is the use of materiality in CFS? It says the auditor is required to compute the materiality for the group as a whole. Like, who's the owner of Just Dial? Who's the owner of, have you heard about Just Dial company? Like you call that 8888 10 times. You can take number, anybody ka contact number, okay? Who's the owner of Just Dial? My best friend, Mukesh Ambani. Reliance owns Just Dial. Have you heard about a company called as, it's a toy ka company, Hamleys? Who's the owner? Reliance. So I'll show you Reliance ka audit report, okay? So I'm a crazy fan for Reliance. Fan moment happens. So this uncle, Dhruva Ambani. Okay. Can you see that? Read the turnover, how much it is? This is 5,39,238 crores. This is not 539. This is 539,238 crores. How many zeros? Seven zeros. Okay. Forget the turnover. See the profit. It's 53,739 crores. 53,000 is your basically annual stipend of a C article. Okay. 5379 crore. Okay. I'll show you the consolidated figures for them. Now see, investment by Reliance. so and so Development Limited in its subsidiaries. This is number one, 33. Hold on. 58. Now see, how do they make this subsidy? These are areas in Mumbai. Yeah? Have you heard about that? In Mumbai, there's another airport coming up. So basically, we have two airports right now. There's third airport, Navi Mumbai Airport. So Reliance saw this long back. So what they did, they bought all the lands nearby that airport. So who is constructing the airport? Adani. Who owns the land? Ambani. All new people. Okay? Because the country is run by two Gujus, Laurel and Hardy. Who are those? Modi ji and Amit Shah. Okay? Left and right is one is Ambani, other one is Adani. All these areas are near the new airport, like Dronagiri, Panje. All these are nearby areas of Mumbai. Kalomboli North, Kalomboli East, Kalomboli West, Kalomboli South. You have learned four zones. See the brain of Mukesh. Okay? Kalomboli North first, Kalomboli South first. Okay? Then North second, North third. Okay? So first they have made a company called Kalomboli North. So they acquired, they did some business. Okay? Then North first, North second, North third. And now there's North fourth also. Then South first, South second, South third, South fourth. Ulve. So it's very near to the new airport. Ulve North, Ulve East, Ulve West, Ulve South. Then Ulve Waterfront North, Ulve Waterfront East, Ulve Waterfront West, Ulve Waterfront South. What is this addition? Waterfront. So this is, I'm not doing time pass. This is the number of subsidiaries. 58 subsidiaries they have. Okay. Now, some companies may, they have done preference shares. Four companies may. Okay. Some company may, they have done strategic business venture. So these are the investment done by Reliance in subsidiaries. Okay. I'm still hunting for the main list. Related party disclosures. List of related parties. This is number one. Huh? Whenever you have time, you can read this. 391. Imagine the level of auditing going on. Related party. Okay. So whenever you are free, you can read this list. Like, see, if you see other income, E18 Com Limited. If you know, Big 92.7 FM is also owned by Reliance. Big Cinemas is also owned by Reliance. Everywhere you will see Reliance only. Now there are only two people. One is Ambani, other one is Adani. Okay. All acquisition good is with Ambani. All the new ones are going with Adani. So imagine all this are owned by Reliance. So this is the list of subsidiaries they have given. Because when we do consolidation, you have to give all the disclosures. Now, as an auditor, you tell me, is it practically possible for us to check everything? No. You will decide what is material, what is not, what is immaterial, okay, what is not material. Now, imagine if they have acquired one subsidiary this year. When they have acquired one subsidiary this year, the turnover of that subsidiary is in lakhs. But the consolidated turnover you just saw, 5,39,738 crore. Subsidiary ka turnover is only in lakhs. But the consolidated turnover is in lakh crore. Now you tell me, will that subsidiary be important as an auditor for us? No, you will ignore it. It says, what is materiality? So the auditor should first determine materiality for the group as a whole. So it says the auditor should determine materiality for the group as a whole. This materiality should be used to check the appropriateness of two kinds of adjustment. Today only I have taught you how many adjustments are there. So what are the two kinds? Permanent and current period. Then the parent auditor can use the materiality computed on the group level to check whether a particular component का FS are material to the group or not. So one component is material or it is immaterial. Fourth, for each component, he should communicate the same to the component auditor. Now imagine if you're subsidiary auditor, I'm holding auditor. I'll say, okay, you are material, you are not material. You are material, you are not material. Okay. I will inform to the other auditors. Now, the parent auditor should also obtain certain confirmation from the component auditor, like independence, code of ethics, disclosure requirement. If you know, can you own a share in a company as an auditor? No, not even one share. But your relative can hold. How much shares? Face value up to 1 lakh. You must have done this at intermediate. Okay. Indebtedness. What's the limit for indebtedness? Up to 5 lakhs. So whether you are indebted, whether you have taken share, whether your relative have taken share, whether you are independent, not independent, so you have to give a disclosure. So the parent quarter will take confirmation from component quarter. Component basically means what? Subsidiary, associate, joint venture. Their auditor you give me in writing. Now, while considering the observation, that is modification. What does modification means? I taught you in the, first half. Modification means any opinion other than clean. When I say any opinion other than clean means qualify, adverse, disclaimer. Or when you're adding EOM para. EOM means emphasis matter para. Or when you're adding OM para, other matter para, of the components order in his report, the parent auditor shall comply with the requirement of SA 600 using the work of another auditor. This is the SA 600 using the work of another auditor. We'll just add one line. The auditor should consider the requirement of SA 600. Therefore, materiality will be considered. The question is whether you should consider materiality. The answer is yes. Therefore, materiality would be considered while considering the observation of component auditor. So these are 7 points. You need to mark it up. The ultimate question is whether you should consider materiality. The answer is yes. So first you will consider materiality for the group as a whole. Number two, you will use this materiality to check the appropriateness of two adjustments. What are the two adjustments? PCA and CPCA. Then the parent auditor will use a materiality computed for the group to check the materiality whether the particular component is material to the group or not individually. Okay. Then, for each component, he will communicate the same to the component coordinator. Once you are talking with the component coordinator, you will take something in writing regarding independence, code of ethics, disclosure requirement. When you want to add modification, when you want to add EOM para, when you want to add OM para, the auditor will comply with the requirements of SA 600. What is 600? We're going to do post break. Okay. SA 600 using the work of another auditor. Then you will conclude the answer. Therefore, materiality would be considered. Straight away, direct question, you will see the question of word materiality. In the entire syllabus, if there's a question on materiality for the component coordinator, this answer is there. Okay. Okay. Question number 11, we do it post break because it is really tricky. We have to do some question from the module, then from the question bank, then we'll be doing question number 11. Okay. Only one answer pending. Also, this is not an answer. You have already studied this with me. Okay. How to compile this, we're going to do post break. Have you understood the chapter? 90% chapter is only one answer and 10% standards ka part is pending. Okay. So we'll be completing one chapter today. Almost every day one chapter would get over except for the big chapters. Okay. Acha, I have ordered the books now. So 5 books are on the way. I think by tomorrow or day after it will reach. So the 3 extra people. Okay. So I think you will be getting the books by Monday or Tuesday. In the meantime, I am arranging the hard copy of the chapters what we are doing. So I'll give you Xerox of that. So that whatever we do marking, you do in your respective book. Later on, you copy it in the main book. Is it fine with you guys? So I'll ask the team to get the Xerox for the tomorrow's chapter so that we are at par then. Okay, for all the 8, I think 8 people have not got the book today, right? So for all the 8 people, we will arrange the book. We'll arrange the Xerox. Cool. So what time will be back? It's around 6 right now. Speak from the mouth. 30, 20. Come by 2025. Okay. I'll leave you early. I will not extend till 8:30. I'm also human. You're also human. Right? I leave around 8 o'clock. Okay. Come by 6:20, 25.